Welcome to the STEMULATION Podcast. Today we have Michael Kohlman. Why don't you introduce yourself a bit, Michael?
Hey guys, I'm Michael Kohlman. I'm a graduate from St. Francis High School in Calgary, Alberta, going to the University of Calgary Schulich School of Engineering in the fall. And I got into stock market investing when I was about 15. My mom really introduced me to it. She's in a financial background, so that's really cool. And yeah, today we're just going to be talking about a little bit of stock market kind of dialogue here.
Perfect. Alrighty, so like you heard, we're talking about stock market today. Michael seems to be a little bit of a pro. You can check out some of his articles on our website. He's got a series going. But to start off, Michael, why don't you give us a brief overview of how you got into stock market investing and what was your first experience like?
All right, yeah. So like I said, around 15, my mom set up this kind of joint account that you can invest in the stock market without being an adult yet, because normally you couldn't. And so we got that set up. That was quite a process. It's like kind of hard, like to get the legal stuff figured out. But after that, we were good to go. I started up with an investment platform called Qtrade, which was really good for kind of young investors. They give lots of discounts and things like that. And I think the first stock I ever bought, I think it was called Timber Creek Financial, just a chill financial company, nice dividend income, stuff like that. And that one I've had like up until now, and I just keep buying more because it's really good stock. So if you're starting in getting invested and you're in Canada, you could buy Timber Creek and it should be good for you. It's pretty stable, solid income.
Nice.
And yeah, other than that.
So is your family kind of encouraged you to get into it and everything like that, or is a fairly financially oriented household idea?
Yeah, somewhat, I guess. Like, it's mostly my mom who's into it. She's works for an investment company, right? So she has a lot of experience with managing portfolios and things like that. And so she kind of taught me like all of the different lingo and terms, like EBITDA and stuff like that, REITs and dividends and yields and all that stuff. And so going through all that, that's also kind of what I'm doing in my blogs right now. The next kind of part is going to be going over like all of those details that make up a stock and like how you look at them to find the best stocks.
Oh, nice. Cool. So I guess, Timber Creek Financial was your first stock. What process, like for somebody who's doing this for the first time, like I personally never bought a stock. And every time that I've gone and looked at it, there's just so many out there. How did you come about that first stock?
Definitely. Yeah. It's really like daunting looking through. There's so many pages of just numbers and numbers that I still don't really understand fully. But my mom kind of taught me like a couple big ones to look at. And so if you're investing for income like I am, where you're buying a lot of dividend stocks that are low risk, you want to look at earnings per share, which is literally just how profitable the company is divided by the amount of shares. You want that to be positive and as high as possible. You look at the chart, like the stock price history, and you want to buy it when it's kind of low, but also where you think it's going to increase in the future. And then the last thing is you just want to look at the dividend. Obviously, you want to make sure it's paying out a good dividend, around 5% to 10%, and the payout ratio, which is the percentage of the company's profits that are going into dividends. So if it's like over 100%, then they're spending more than their entire profits paying dividends, which isn't sustainable, right? So you don't want to buy that company. Just kind of things like that.
So some companies, in order to attract investors, will actually pay out more than what they're bringing in through profits.
Yeah? Right. Yeah. They want to keep the dividend really high to attract investors. But if their profits sink, it's really not advantageous for a company to cut their dividends. So they try to keep the dividend here, even though their profits are here. But obviously, if their profits are below their dividend payouts for too long, they're going to have to cut it, and the stock price will just tank when they do that. So
True. Okay. So I guess with your investments then, you said, I believe I read your blog, you've been in this since 2015. Was that how, or like around there, or
I would
how
say
long?
I guess 2017,
Okay,
since I'm,
2017.
yeah, because I invested since I was 15 and I'm 18 now. So
Okay. So is your strategy more than like, it's not like trading necessarily, but more investing in long term, or do you do a little bit of both, or what's your sort of strategy in that way?
right, yeah, good question. Mainly just income, but if a stock goes up like 20% of the value I bought it for, you'll usually sell at that point, just because like it's probably pretty likely that it'll start going down at some point if it's already 20% above like what you bought it for.
Hmm.
Um, in terms of like if it's lower than what I bought it for, I tend to just hold it. Like especially during this downturn, a lot of the stocks have just tanked, right?
Yeah.
So it's kind of nasty. I don't look at it too much because it'll probably come back up when things go back to normal. And actually, right now is a good time to buy, probably because everything's so low. But yeah, in terms of like trading versus just investing and getting income, I prefer income because it's a lot less risky.
Mhm. Yeah. So with income, then do you check your stocks like, I don't know, once a week? Are you checking them every day? How often are you checking the Yahoo Finance or whatever you're checking for your stocks?
Normally, like if I was at school and all that, I might check it like once per week just to make sure nothing crazy's happened. And if you read that one post where I invested in WestJet and then the stock price doubled in a day, something
Mhm.
crazy happened there. But normally, yeah, well, like once per week, just on the bus ride to school or whatever, just quickly open the app. But lately, it's been like every day just because I'm super bored. So I'm looking into like a lot of different stocks to invest in these days. But yeah,
Okay. Um, okay, I've got another question for you then. Risk management. How do you, so you say like it's tough right now with COVID a little bit to look at it going down. How do you handle the pressures of that yourself and the worrisome ideas that, oh man, I might not get my money back and things like that? How do you deal with that personally?
right. I try to like diversify my portfolio a lot, right? Where you're in so many different industries that even if one's like really struggling, you've got 10 others that are probably going to rebound just fine. And
Hmm.
then that also kind of comes with not looking at it too much and not like obsessing over the prices on a day-to-day basis, I guess like I have been this past week, because then you're just going to drive yourself nuts like, oh no, it's down 5 cents today and stuff, but like it doesn't matter.
Hmm.
And ultimately you don't lose the money until you sell the stock, right? So if you hold it and you are pretty sure it's going to maintain its way through this pandemic and be okay, then you won't necessarily even be selling it at a loss. It could go back up even more and you could get a gain. So
Hmm.
that's how I kind of think about it. But
Hmm.
eventually, if it's down like 20%, just like how I said, if it's up 20%, you should think about selling. Same thing if it's like down 20%, it's just tanking. You might want to cut your losses at that point. But with this pandemic thing, everything's down like 50%. So that's not even in the conversation right now.
Yeah. Okay. True. You have to really be aware of knowing that it will hopefully come back, or almost guaranteed to come back at some point, right? Unless the
Right.
world burns down.
Yep.
Yeah.
What the question, honestly, this year, man. Holy.
Yeah. So I guess I read in your article, you talked about, in your most recent one about dividends, you talked about a few different classifications. So you're mostly into the long-term dividend stocks. That's your favorite, right?
Right.
And you don't, and so do you focus on growth at all, or do you just kind of sit there and chill and hope that those dividends will just work their way out?
I'm focused like on growth kind of as an aside. Like I buy stocks with the intention of getting their dividend, but then I kind of focus on waiting to buy those stocks until they're low so that I can get some of that growth. Like just last week, I was trying to buy TELUS, and I set a limit, which is kind of when you buy it, like when it'll automatically buy it for $22. And then the stock price fell to $22.01. So I was like, yes, I'm going to get it in a second here. But then it rebounded like right up back to $24 or something like that. So if I just like bought it at the $22.01, I would have had it at 22. But now it's back up to like 24, right? So you have to like can't be too cautious with the growth, but that's kind of what I look for, where I let it drop as much as I think it can, and then I get it.
Man, that sounds brutal. Like right, like 1 cent difference. That made it,
Something
eh?
like
Yeah.
yeah,
What's your average order size then? If you're so say like what would be the average amount of money that you would put into a single stock?
right. I try to keep it like 10 to 20% of your portfolio value usually.
Okay.
Obviously, if you're just starting out with like $1,000, then you can put that all into one stock. But to start, like you don't want to have 50% in one company, because if that company falters, basically half your portfolio falters. Um,
Hmm.
so mine have been like 1,000, 2,000, but if they're higher risk, I usually go like 500.
Okay.
Yeah.
Awesome. Alrighty. So I'm gonna shift gears a little bit here. So you say you're going into engineering to study engineering. What's your sort of comment on the idea of having like passive income with stocks and investing and that sort of idea, as well as having like a career and and an education and everything in engineering in that way? Like, what's your sort of outlook with that? What's your goals with that, and how do you plan to manage that?
Right. I think that's great. That's an awesome question, because it's really applicable to kind of all STEM students. Like if they want to get into investing, how they can use it to kind of fund major parts of their life. So for me, like the ultimate goal would be just from passive income to make around the minimum living standard wage. So that's around like $30,000 per year. And so if I could make that per year, basically all my life expenses would be covered by that, and then everything I make from any kind of job or anything like that would be covered. Or I could like start a business or something like that, and my life expenses would be covered by my income, and then I can put everything into that company. So I
Hmm.
think things like that, like planning ahead like that, especially for engineers, entrepreneurs, businessmen and things like that, is really helpful, and it's great to start now as us being students, because a lot of us are still, living at home and getting help from our parents and stuff like that. So we're not as encumbered by like a bunch of bills to pay it constantly. So more of our money that we make from jobs or whatever can go into investments. So yeah,
True. Very true. Yeah. So you're an entrepreneurial minded engineer then.
definitely. Yeah, I
Yeah.
hope to start some businesses, and like what we're doing with STEMULATION, I think is awesome.
Hmm. Yeah.
Really excited.
Yeah. Same. Yeah. I'm much in the same vein as that. Um, I'm trying to think here. Any final thoughts on stocks and investing for today?
Final thoughts. Yeah, just it's something a lot of people I think take for granted, or like don't really look at too much. They think like you need a financial degree, you need to be like some old rich businessman and just invest in like penny stocks or something like that. No, you can have stocks that are not much higher risk than like a bank account savings or GICs, and you can do it as a student with no experience. Just learn like the basic metrics to evaluate if it's a good buy. And as a student like me, or whoever, or you, or whoever, you could be funding like major parts of your life without much effort, which is cool.
Very awesome. Yeah. And those are very, very good words of advice for lots of people our age. So that's awesome. Well, I've appreciated having you on here today.
Yeah,
Hopefully we can see you again and all that, and maybe have you have any crazy stock stories that you want to tell? I'm sure lots of people would want to listen. So we could have you on again. But yeah, thanks for coming on today. And
Definitely.
we'll see you again.
All right. Thanks for having me.
No problem. Peace.